Welcome to everybody. Thanks a lot to join us for today's webinar session. We are going to give some minutes more to the people to join. Thanks a lot. Thanks for the people that are joining us. I see that you keep on joining. Thanks a lot to be here. You are well connected for the webinar series of the Green, Inclusive and Climate Smart Finance Action Group. Welcome to everybody. Thanks a lot for your interest. Thanks to be here. I'm gonna just give some other 1 minute or two to leave the other people to possibility to connect, and then we're gonna start. Okay, so in the meantime, we wait to start. I would like to remind to everyone that you can interact with us using the chat. Yeah, so you can post there your comments, your question, or if you really want to have question, you have a Q&A question slot where you can post your question and answer. So answer, maybe we post the answer and you post the question, and then also, if someone wants to ask directly by voice, yeah, of course, we can open you the microphone with pleasure. Just click on the button you will find on the bottom where you can raise your hand so that we know that you would like to speak. We're going to try to get the question at the end. So please post them. Please at the end raise your hands so that we can then give you the floor. So in 1 minute we start. Okay, so I will suggest we start. So first of all, thanks a lot again to the people that are connected today. So today is our monthly webinar series. We have the great honor to have with us this week Seifu Teshome, the UNCDF, that is Finance and Energy Access Coordinator for Ethiopia. So I think it will be a very exciting webinar. The topic we're going to speak about is the key topic for the action group. Yeah, you see, is really as the title of our action group, was Green, Inclusive and Climate Smart Finance, basically building on the challenge and opportunity for clean energy in Ethiopia. Voila, so I think thanks a lot for your interest in this topic. It's key for the energy transition and for obtaining various of the objectives that everyone is near to our heart. I would like to remind that this webinar series, first of all, is part of the Green, Inclusive and Climate Finance Action Group webinar series. So it is part of this series we give every 2 weeks. Second, that you can find the material, that means the presentation, and then also the video online on our web page. And if will not be joinable to the web page, we are restructuring the web page. It will be live very soon. We will send out the registration as well as the material first to the attendees of this webinar, and then we will gonna post on our website. Voila. So before getting the words to Seifu, just a couple of words for the people that don't know us. Yeah, this is the Green, Inclusive, and Climate Smart Finance Action Group. As you know, this action group has been founded in February 2013 in Berlin. Yeah, the topic or the key activity of the action group is to be a multi-think tank, multi-share, multi-stakeholder think tanks. Basically, the focus on environmental, responsible, inclusive finance. Yeah, the idea of the group is really to foster discussion about challenging strategies on green inclusive finance, enhance knowledge for the greater good, foster action and cooperation and commitment among various stakeholders and among various programs, develop dedicated tools for green inclusive finance, yeah, publicize and disseminate fundings from our member, but also much broadly beyond our member. As of today, we have around more than 90 members representing more than 60 institutions. Demand is growing. We will soon reach 150 or so. So that I think we're very proud about that because it really means that there is a lot of traction for this topic. The group is coordinated by Natalia Realpe Carrillo, that is here with me from EDERA and the Institute for Advanced Studies, ESS in Potsdam, and by myself, Davide, I'm coordinating over this group, as well as researcher Sermi, and as well working for Yapo Solution. Now, maybe just a word about the achievement of ongoing activities. So achievement, you can find it there about ongoing activities. What I would like to highlight is that we are really on an excited moment for the green inclusive finance. So we just released for the first round of feedback the Green Index 3.0, as well as the environmental dimension. So that is the dimension 7 universal standard for a social performance task force in that case. So we are now undergoing a round of feedback round from experts. Just now, it's going to be closed by the end of this month normally, and then we're going to have a second feedback round, and this tool, that is the Green 3.0, as well as the dimension 7 for environmental performance as part of the social performance standard of the US, the social performance task force, will become publicly available by June. And we acknowledge everyone that is now part of this feedback round. Voila. If you want to know more about this process, please let us know. And if you want to be part of the second round of the feedback, please let us know. We'll be very happy to include you. Yeah, that second feedback round is going to start in the first week or second week of May. Well, so this is the action group. Maybe 2 words about this webinar series again. So if someone would like to join, so this webinar series is about describing topics, is fixed on the topic of green inclusive finance. So I think it's quite original. We just have a series on this topic, and by green inclusive finance, we're going to discuss topic that are financing sustainable solution or adaptation, to main challenge about environmental degradation and climate change for the most excluded population, poor household, micro, small, and medium enterprises. Yeah? The idea is that this webinar series is provided by members of the action group or by external people, expert, as in this case. We are going to have a brief presentation. Yeah, could be by practitioner or academics. Yeah, could be a description of a project. Could be a specific study. Could be a sectorial studies. And we're going to discuss about the main result. So we have 2 kinds of setup available. One is a presentation as of today that is going to last more or less till the end of this hour. And then we have also a short presentation about just 15 minutes if someone wants to share some key insight to discuss with the public. So everyone is clearly invited to submit the request to participate. We will be happy to schedule you into this webinar series. Please write us. We will have the information at the end of the presentation. So without consuming too much of your time, I would like now to reintroduce once again the topic of today. Yeah, the topic of today is describing about an interesting implementation for clean energy in Ethiopia, and discussing about the challenge opportunity observed. This is about UNCDF, and we have the great honor to have here with us to present this implementation, the coordinator for Ethiopia of Finance and Energy Access. Seifu, the word is yours.
Thank you so much, Davide, for the kind introduction and the nice one. I'm very honored to be the speaker of this webinar and happy to share our experience in the energy finance space. So UNCDF is the unique UN agency which has an investment mandate, which makes it different from other UN agencies. So David can move to the next slide, please. So in this specific webinar, I'm going to share our work specifically in energy. But before we deep dive to our energy work, I would like to give you some highlights about the UNCDF, when it was started, what instrument does it offer to the market, what kind of products are financed, and the type of projects that we are currently engaged with. So as I described earlier, UNCDF established 55 years ago in 1966 by the UN resolution with a specific or unique investment mandate to provide like capital and technical assistance to both private and public sector. So the main idea of establishing UNCDF is to fill the gap of access to finance and to contribute to the improvement of the economies of the least developed countries. So currently we are working in least developed countries to support the local people to have access to basic services like finance, health, education, energy, and so on. So in doing so, UNCDF provides 3 solutions at the moment. The first one is it works on improving financial inclusion. Now, this name is changed to inclusive digital economies, which deals with improving the access to finance of householders, individuals, small businesses, and so on, so that they can be actively participated in the economy and improve their living standards. So this is one mandate. So in this mandate, UNCDF provide technical assistance to the government to create an enabling environment for financial inclusion. Also, it provides technical assistance to consumers and businesses so that they can have access to finance as well. So this is the main work of UNCDF. And the second intervention is local development finance. As the name indicates, it mainly works on development of local economies through local governments. So under this initiative, UNCDF works with both federal and local governments to support them in their work of like fiscal decentralization, municipal finance, and so on. So it also provides structured project finance so that the local governments can attract private and public capital for economic development, sustainable development, as well as climate adaptation. The third intervention area of UNCDF is the least developed countries investment platform. With, in short, we call it LDCIP. So this is the new kind of intervention introduced by UNCDF. We can call it the investment arm of UNCDF. So under this platform, we provide loan and guarantees to viable and impactful projects. So under this investment platform, we support different companies across the various sectors like agriculture, energy, local development, and so on. So these are the main intervention areas of UNCDF. Next slide, please. Recently, since 2020, we are implementing a new strategy, which we call it Leaving No One Behind in the Digital Era. The main focus of this strategy is to develop digital economies to serve the marginalized group or vulnerable people like women, youth, refugees, migrants, and women. So Under this strategy, we apply 4 work streams, which have different objectives. The first one is support the policy and regulatory framework that can improve the living standard of the people through financial inclusion and digital economies. So under this work stream, we closely work with the government, developmental partners, and other key stakeholders to fill the gap that enable these vulnerable people to have access to basic service like education, energy, and so on. The second work stream is developing the infrastructure. We call it open digital finance ecosystem. So on this work stream, we focus on building an open ecosystem that enable digital financial service to reach this vulnerable group, like women, youth, MSMEs, migrants. And the third one is innovation, the areas that we are working on this. So this innovation mainly focus, in this innovation, we mainly focus on accelerating innovation that can be scaled and that can be support or enable these vulnerable people have access to basic service, including finance. And the fourth work stream under our digital strategy is building the skills, or we call it customer empowerment. So under this work stream, we provide different types of technical assistance and support to customers so that they have the required digital and financial skills so that they can use available products and service easily. So these are the 4 work streams that our new strategy focuses on. So in implementing these work streams, we apply 5 instruments, strategic instruments. The first one is provision of de-risking capital or financial instruments to support businesses, government, and the public. We also apply technical assistance to the government and to other stakeholders as well. We also believe that engagement of stakeholders is very essential, so that we closely work with various stakeholders working in the area to help the government do or make data-driven or evidence-based decisions. We also do researches and we also provide data on the digital economies. We also use that research for our intervention. So our work is customer-centric. That means we focus on the needs of this highly vulnerable group of the society. So by doing this, we believe that we can make a difference, or we can positively impact the lives of vulnerable groups to have basic services through by leveraging digital services. Next slide, please. So currently, UNCDF is working in 30 countries out of the 46 least developed countries. This is to show you some of the countries that we have local presence, including Ethiopia. Next slide, please. So this is the overall intervention of UNCDF. Now, when we come to the clean energy finance, you know, UNCDF is working to improve access to affordable, reliable, and modern clean energy solution to improve the daily lives of people living in off-grid areas of every countries, especially in least developed countries. So UNCDF believes that access to finance is instrumental to improve access to clean energy, so that we promote access to finance. So under our energy program, we have 4 components. The first one is investment, as it's the name indicates. We provide risk capital or risk capital grants, which is mainly performance-based grants or concessional refinancing facilities, such as guarantees, or loans through local financial institutions to energy service providers, so that they can scale their business and serve the underserved or unserved part of the community in off-grid areas. The second component of our energy work is related to technical service provision. So the main focus of this service is to make energy companies bankable and enable financial institutions to develop appropriate loan products or other financial services that cater to the financing needs of energy companies as well as last mile customers. So we link them with business development service providers. We help them to have bankable business plan and so on. So this is our second component. The third component is related to knowledge management and learning. So under this, we conduct various researches on the area to better understand the needs of the sector, to help the government to provide data-driven decision-making, or to formulate policies that can help the growth of the clean energy sector in each respective countries. The fourth component of our program is related to advocacy and partnership. So we closely work with the government to improve the ecosystem, or to create an enabling environment for clean energy sector. We also believe that partnering with other stakeholders or key players in the market is instrumental to support the clean energy sector in general. So that these are the four major components of our program. Next slide, please. So under our investment component, we introduced different types of investment models since 2014. These are mainly in form of grants or loans and guarantees. So for instance, the first model we tested in 2014 was provision of loan to energy companies and end users through microfinance institutions. So under this model, we provided grants to eligible microfinance institutions so that they can provide or on lend this money to energy service providers. The other model that we tried and which is still operating is the Challenge Fund, which is mainly performance-based grants to energy companies and financial institutions to accelerate deployment of clean energy technologies in different countries. For instance, we have now active challenge funds in DRC, Burkina, and Uganda with various windows that serves both clean cooking solutions and solar energy technologies. The other model that we applied is National Refinancing Facility, which is either guarantee or loan for renewable energy. Now, under this model, we established a guarantee facility with Development Bank of Ethiopia. We have another loan scheme in Nepal with the Central Renewable Energy Fund. So this model tested and it proves that it works in markets like Ethiopia, where access to finance is very limited. The other and the new one is the investment capital through the UNCDF investment arm, which is a least developed countries investment platform. So under this platform, we provide, we facilitated, because this investment platform has its own investment specialists, and it has its own investment committee that approve provision of loans or guarantees to eligible companies, not only in energy, but also in other sectors like agriculture. So Actually, as Energy team, we facilitated loan or guarantees from this platform to energy companies and financial institutions. Next slide, please. So this is just to show our partners or investment portfolio. In the left-hand side, you can see our partners, those who have got challenge fund, which is a performance-based grant in Uganda. In the middle, you can see our partners in Ethiopia, which is partners of our guarantee facility established within the Development Bank of Ethiopia. In the right-hand side, this is a new challenge fund, which was issued end of last year in Burkina. So it focuses on solar, improved cook-stove companies. Also, we have a challenge fund in DRC. It is also in improved cook-stove. In Uganda, it serves both solar and cook-stove. In Ethiopia, it is similar. It focuses on both solar and improved cook-stove solutions. We have also partners who have got funding from LDCIP, including one financial institution in Ethiopia. Next slide, please. So now we come to our experience in Ethiopia. So we have been active in Ethiopia since 2014 in collaboration with UNDP, Ministry of Water, Irrigation and Energy, as well as the Development Bank of Ethiopia. We established a USD 1.4 million guarantee facility to support energy service providers to have access to finance. Because, you know, lending in Ethiopia is mainly collateral based. So financial institution also requires excessive collateral to lend to their customers. Because of this, small companies like energy companies were not able to access formal credit from financial institution. So in order to solve that problem, we established a guarantee facility, which has three major outputs. The first one is provision of 50% credit risk guarantee to leverage finance from banks or microfinance institution. Initially, it was designed to be a 50% guarantee, but after we operated for some time, we realized that it is a challenge for women because asset ownership of women in Ethiopia is very low. So after we realized that problem, we increased the guarantee coverage to 70%, mainly for women-owned businesses and companies operating in developing regional states. You know, we have 10 regional states, so only 4 of them are very well developed and the rest are not well developed. So banks sometimes discounted the collateral in developing regional states at a higher rate. So because of that, that remains still a problem for those companies operating in that region. So for them, we increased our guarantee facility to 70%. We also provide technical assistance to government, financial service provider, and renewable energy technology suppliers. So this is mainly to increase the uptake of the guarantee facility, because for some financial institution, even it was a new idea to provide loan to energy service providers. They don't have very good knowledge about the sector in general. So for that, we supported financial service providers so that they can develop appropriate financial products that can cater to the financing needs of energy service providers. We also provided technical assistance to energy companies to make them bankable. For that, we help them to develop bankable business plan, help them to have proper accounting records, because that is one of the requirements of financial institutions. We also supported government when I mean government, it is Ministry of Water, Irrigation and Energy about the guarantee facility. We also provide continuous support to the Development Bank of Ethiopia on operationalization of the guarantee facility. The other output of our guarantee facility is knowledge management. So under this, we conducted various researches. We create awareness among financial institutions, rate suppliers, and consumers. We also conducted like coordination meeting with projects that are active in clean energy sector. So these are the main activities or outputs of our guarantee facility. So when the guarantee facility was established, it has a target of serving at least 200 energy service providers and enable 290. It is 290,000 households to have access to clean energy solution. So, I mentioned here that the IDE energy program, IDE is Inclusive Digital Economy. It was previously, our name was Clean Start, UNCDF Clean Start. That name no more exists because following the new strategy, our digital strategy, we changed our name from Clean Start to IDE energy program. So mainly, our work is under the inclusive digital economy, so that our name come to this point. So the main focus of IDE is like connecting these households and businesses with financial ecosystem. So it aligns with our energy work. Next slide, please, David. So in Ethiopia, over the past 5 years, we achieved so many things. The first one is in terms of finance, we were able to sign guarantee framework agreement with 11 financial institutions. These are small as compared to the total number of financial institutions in Ethiopia. Currently, we have like 16 private banks, 2 public banks, and over 40 microfinance institutions. So, but however, due to various reasons, the other financial institutions were not able to join our facility. With this financial institution, we issued 26.4 million guarantee agreement. When we compare to the available fund, we already utilized around 97% of the fund, the facility. So that with this guarantee facility, we provided around 53 million to 18 energy service providers through our partner financial institution. In terms of clean energy technologies, these partner financial energy service providers were able to sold over 437,000 clean energy products to 437,000 households, which is above, well exceeds the target of 290,000 households. In terms of technology, majority of it is for improved cooktop solutions, which is around 227,000, and the remaining 110,000 is solar energy technologies. In terms of technical assistance, we provided TA on, we are still providing a continuous TA to Development Bank of Ethiopia, which acts as a guarantor and fund manager on our behalf, so that there is a consultant there continuously providing the necessary support to DB. We also provide capacity building, as mentioned earlier, to financial institutions or loan product development, as well as we provide TA to energy service providers in terms of, we provide training on business plan preparation. We helped around 33 energy service providers to develop bankable business plan. We also helped these companies to have a proper accounting records. Next slide, please. And the other area is knowledge management and dissemination. As I mentioned earlier, we conducted various studies to help the government have the necessary data and evidence so that they can use that data for their formulation of policies on the clean energy sector. We conducted national learning and sharing workshop. The main idea of this workshop is to make coordination among various projects that are working on clean energy. In that workshop, we found out that so many projects are running for the same objective, so that instead of we believe that when we work together, we can make a change, or we can bring changes in the lives of the rural people living in off-grid areas. So that is the main objective of that workshop, to make coordination among the various projects. We also organized experience sharing visits to the government and other project implementing partners, so that they can learn from the experience of other countries, and they can implement that can be easily implemented in Ethiopia. So these are the major achievements that we made in the last 5 years. Next slide, please. So when we come to the challenges and lesson learned, one of the key challenges that we faced in the sector is shortage of foreign currency. So because of that, most of the solar, not most of, all of the solar energy technologies are imported from abroad. So because of shortage of foreign currency, there is a shortage of product supply. That is one challenge that we face. The other challenge that we faced in our project is even with the availability of the partial credit guarantee, there is still excessive collateral requirements. So because of that, most of the energy companies were not able to cover the remaining 50% or 30% of the collateral requirements. So that is one challenge. The other challenge is very severe liquidity shortage in the financial institution sector, in the financial sector, so that most of them were not able to join our program. There is also one challenge in relation to the interest rates charged by MFIs. So most MFIs do not have appropriate core banking solution or MIs, so that they apply a flat interest rate. So that makes the loan very expensive, and it has a pressure on the price of the product is financed through loans. So that is a big challenge for us. So in the last 5 years, we learned that, the technical assistance component was very instrumental because we didn't face any default so far in our guaranteed loans, because we provided both technical assistance to both financial institution and energy service providers. So the financial institution know where to lend, which company is eligible, because as I said earlier, most of them are new to the energy sector. So that is one lesson we learned. The other lesson that we learned is that during guarantee framework agreement time, we had a lot of negotiation with financial institution, because most of them are new, as I said, most of them are new to the sector, so that they asked a lot of things about the terms and conditions stated in the agreement. So we spent a lot of time on negotiation. So that helped us because it makes easy for approval and issuance of new guarantees with other financial institutions. We also learned that in countries where lending is mainly related to collateral, a guarantee facility is the best solution. It's not the best, but it's a better solution, because it helped some companies to have access to access to credit for the first time. So we also learned that in addition to a guarantee facility, provision of loanable funds to the financial institution is instrumental, because as I mentioned, there is a huge liquidity problem in the financial sector. So we learned that once we provided some loan to one of our partner financial institution, loans through the LDCIP, it can easily provide a loan to its customers. So that is the major lesson that we learned from our project. Next slide, please. So now, in addition to our guarantee facility, starting from last year, we tried to introduce new financing mechanism to energy companies as well as financial institutions willing to serve the clean energy sector. So the first one, for the first time, we mobilized around 300,000 USD from LDCIP to one of our partner MFIs. In order to support it to increase its lending to the clean energy sector. So from this funding, it already provided around 8.2 million to finance over 1,500 different types of solar energy technologies, including solar technologies with TVs, with mobile charger, and so on. So that is one achievement. So from this scheme, over 1,500 households benefited. We also try to introduce an additional, another financing mechanism, which was tested in other countries like Uganda, Burkina, and DRC, which is a challenge fund. So now we are working to launch our first challenge fund in Ethiopia to provide performance-based grants to energy service providers that are willing to pilot and scale up PEGO model, which is mainly the payment will be using their mobile phone, and we can name it as like pay and own it. So that would we believe that would significantly improve access to clean energy in rural areas. Next slide, please. I think we come to an end. Thank you so much for your attention. Over to you, David.
Thanks a lot, Seifu. It was a fantastic presentation and really providing a lot of insight from various experiences and quite some outreach and long work into the country, also with possible impact to other countries as well. So that's, I think, was a major piece for our understanding of how these things works. We have some questions here on the chat, so we start with them. Yeah, we have some 15 minutes to go through the question, and then maybe I have a couple of questions as well. So let's see. One question come saying from the beginning of your presentation is that every clean energy technology must take into account maintenance and sustainability. So question is, how sustainable is the project in regard to remote villages? You are muted. Yes, please.
Yeah, sorry. Yeah, it's a good question. Yeah, I'm glad that you raised it. I think in order to ensure sustainability in rural areas, yeah, one of the things that we are working on is supporting financial institution to provide this loan without our existence. We also provide technical assistance to energy service providers so that they are bankable and they can apply for loan. So one of the main idea of our project is to create a credit history for companies which had never had access to credit. So once they have credit history, it is easy for them to have access to credit so that they can expand their business wherever they want to go. Yeah.
Thank you. I will take another question where it is written clearly highlighting a point that is relevant for this time about the pandemic. So the question is, of course, we acknowledge you for the great presentation. It is very interesting to see your work and lesson in Ethiopia. It will be interesting to know your opinion about the impact of the pandemic, especially prior to pandemic. What changes, trends, or direction were noticeable in energy finance? For example, funding becoming less or more accessible, or certain type of funding become more prevalent. According to you, have you observed what you have observed? How have these trends impacted by the pandemic?
Okay, great. Like any other sector, the energy sector is also highly affected by the pandemic. For instance, in our work, some of our partner energy service providers were not able to sell what they planned because there were travel restriction and gathering of people. So because of that, their sales dropped significantly, and they were not able to finance their loan on time. So because of that, they requested restructuring of their loan. So based on the direction given by the government at that time, financial institution should consider restructuring of their customers' loan. For that, the government provided loanable fund. For this purpose, the government provided loanable fund for the financial institution. It allocated 15 billion Ethiopian birr at that time, so that the financial institution easily restructured their customers' loan, which are highly affected by the pandemic. The pandemic has dual effects on our project. One, in terms of repayment of guaranteed loan, it's delayed for some time. Second, it's highly affected distribution of clean energy technologies in rural areas. Before the pandemic, we saw a very good increase in sales of clean energy technologies by partner energy companies. But after the pandemic, it declined significantly. Now the situation is improving, and it shows some improvement in sales of clean energy technologies.
Thank you. There is another interesting question from Anthony Storrow that asks us, when DBE refinance a loan portfolio, do they then manage that portfolio? The clients are likely to be diverse places and as well far away from DBE branches.
Actually, the guarantee facility is managed by DB headquarters, not branches. So when the client is living away from the branches of DBE, they can directly contact to the local or the regional energy bureaus, so that on behalf of DBs, these energy bureaus collected the application and send it to the Development Bank of Ethiopia, so that everybody who lives in remote areas out of reach of DB branches can be served through the energy bureaus, because energy bureaus are available in every regions with zonal and woreda presence. So that way we solve this problem.
Thank you. Davide Castellani is asking us about the price for this loan. So why is the facility not driving down the interest rate? Is it just because MFIs have an inflexible lending policy, or is it because of liquidity constraints?
So, you know, how we work in this guarantee facility is we let the financial institution to apply their credit policy when they extend the loan to energy companies. because most of them do not agree, because we come up with the guarantee facility, not loanable fund. When we see the demand for finance in Ethiopia is way higher than the supply, so most of the financial institution wouldn't agree if we ask them to reduce the interest rates. That is one problem that we face. But you know, when we come to the loanable funds that we provided to one of our partner MFI, in that aspect, we analyzed its interest rates so that it agreed to provide a lower interest rates as compared to other products, so that in that way we can negotiate with financial institution. Otherwise, it is difficult to negotiate. Yeah, they are working as per their credit policy.
Thank you. Bill Gallery is telling us about if you can provide any details on the terms of the guarantee facility offered to partners.
I can provide some details. Yes, guarantee. You know, it is the guarantee facility is based on open competition. We issue expression of interest to financial institutions so that they can apply to utilize the guarantee facility. So when they are applying, we conducted due diligence. So we have a criteria that each financial institution should fulfill. For instance, their capital adequacy, their liquidity position, the strengths of their management, and so on. So after that, we signed a guarantee framework agreement. So in this guarantee, the guarantee facility, the guarantee coverage is active until the whole loan amount is paid. Second, the financial institution should pay 2% guarantee fee per year, which is payable to the Development Bank of Ethiopia to cover its operational costs while managing this facility. The other term, I think, these are the major terms that we apply in the guarantee facility. At the time of claim, you know, we, without any further approval from the fund management committee and so on, the DB is required to settle any claims that come from the partner financial institution as long as the claim is valid and it meets all requirements. Yeah.
Thank you. I have a couple of questions also from my side, then I come back to the participant. One, I would like to know if you're measuring, you can tell us something about outcomes, like in terms of CO2 offset or reduction in terms of cost of energy or improve of productivity of client. Are you managing any of these impact indicator? Do you see any trends?
Actually, we are doing this kind of assessment at corporate level. You know, we provided the type of technologies and the number of technologies distributed in each countries. So at the global level, they are doing some impact analysis, amount of carbon emission reduced, and so on. These kind of things are done at central level. Yeah, but it is, but we are doing it.
And I have another question for buy side, and I go back to the participant. One interests me the claim you did. Let's say there are no defaults, if I understood correctly. So you provide a guarantee, but no one is defaulting so far on the guarantee. So my question is, means there is not enough risk taking. So it means you provide the guarantee, but still the institution don't take enough risk to go to someone that could eventually default, or is that instead like a good positive message to say it was assumed and perceived as an high risk sector, but instead it's not. So you can provide loans to this kind of product, and so it could allow, you know, to as a showcase that the sector is not so risky as perceived.
Yeah, actually, we don't select companies, rather we select the sector. So it is up to the financial institutions to analyze the creditworthiness of the clients. So one thing that I think they have rigorous credit analysis system, and it happened to select less risky businesses. Maybe that is one reason. But the sector in general is not risky because the businesses are operating. There is a huge demand in the market because currently only 44% of the total population out of 110 million population have access to electricity. So the rest are using kerosene or biomass for lighting. When we come to cooking, above 80% of the population use biomass for cooking. So it shows that there is a huge demand in the market. So anyone who supply these products, there is readily available market in the country. So the sector in general is not a risky one.
Thank you. Another question I received now from the participant is about if you could please highlight on public-private partnership and the role of financing mechanisms. Are private equity investors partnering or are they welcome to collaborate?
Yeah, it's a good question. So far, we didn't try private-public partnership in finance. But now under our investment platform, which is LDCIP, now they start managing funds for a private company, a private equity investment company, so that the available funding for loan and guarantees is now increasing. So now UNCDF is now acting as a fund manager for that private equity company. So it provides, as per its internal policy, it provides loans and guarantees. But so far, we didn't try public and private partnership in the finance landscape.
Thank you. There is a question about the use of digital technology. Yeah, it seems that you're focused on the use of digital technology, and again, now come back to the topic is, it seems the digital technology start to show that is reducing, the cost of contact with clients, so reducing operational cost. So why that is not pushing down the interest rates again? So people are very interested about interest rates. So why digital technology is not a driver for having lower interest rate?
Yeah, we believe that once we introduce this digital solution, the interest rates will be low because, as you mentioned, the transaction cost will be very low. So that is why we try to introduce a challenge fund for companies who want to use digital financial services to sell their energy products. So PEGO, as mentioned, that pay-as-you-go model is one of the digital solution which is available in the energy space. So in Uganda and other markets, it significantly reduces the transaction costs. It makes the products very affordable to the rural community, as well as it reduces the risk of default, because if the clients stop payment, the battery automatically shut down. So it can't be integrated with other solar products. So that in that way, the product itself become collateral. So collateral may not be an issue. The transaction cost will be reduced, and the product become more affordable. So once now we are in preparing request for application for companies who are willing to introduce and scale up PEGO in Ethiopia. So once we introduce that, we believe that the interest rate will be very, very low, because even some companies now starting piloting this PEGO, not through our project, but with other projects. So now we saw that there is a huge demand for that kind of product. So so we will see at the end of this year.
Thank you. So Adrian Loef is clearly picking up on your claim that if the sector is not so risky. The question is why then do you provide guarantee facility? It seems that you may need more focus on liquidity shortage. That seems the key, the key topic. So is there any strategy? First of all, is this claim correct? And second, is there any strategy to increase liquidity for the sector?
Very good question. Before our intervention or other projects' intervention, the lending to the clean energy sector was very minimal because no one tested it whether it is risky or not. So there was a perceived risk in the sector, so that the financial institution were not willing to provide loans or credits to the sector. But once we came to the market and issue our guarantee facility, so the companies become develop credit history, and we see that the sector, when we see the repayment trend, we see that the sector may not be that much risky. But the only problem that still exists, that the financial institution still believes that the sector is risky. That is why they require collateral whenever they lend to the energy sector. So that in Ethiopia, unlike other markets, the lending is collateral based. So most of the energy companies are not able to cover the collateral requirements. So by providing our guarantee, we support them to get access to credit. So that is one thing. The other thing is there is a liquidity shortage. So yes, we saw that, and that is why we introduced last year the first loanable funds through our LDCIP. Now we are building more pipeline, so that whenever there is it's open competition. So we issue request for application for financial institution so that they can apply, and if they are credit worthy as per our internal policies, they can get that funding from LDCIP. So we are working on that as well.
Thank you. I'm gonna just take a last question because we're already over time of 4 minutes. One is about end clients and products. If you have any specific target of which kind of clean energy products are eligible and which kind of end clients could be eligible. And in parallel to that, also, I think this question has a lot of point by Raghuram Bodupalli. Is about also if you observe any successful business model for off-grid access delivery that you would suggest to say, hey, why don't you replicate this business model that looks to work pretty well? So 2 questions, and basically it's the segment of end clients and products, and the other one, is there any reasonable business model you recommend to replicate?
Yeah, we have two target products, that is solar energy and improved cooking solutions. So these are the 2 key products that can be financed through our guarantee facility. In terms of end clients, as long as they are living in the off-grid areas of the country, they are eligible. But this is let's split this question into 2. One, we can categorize our intervention. The first one is our guarantee facility. Our guarantee facility focuses on energy service providers, not end users. So we provide guarantee to energy service providers so that they can supply the products to end users. That is our intervention, because our aim is to increase the supply of clean energy technologies, both solar and cooking solution. When you come to our second intervention, which is LDCIP loan, which we provided to one of our partner MFI, which focuses on provision of credits to end users. So in that way, we are serving the demand side, not the supply side. So any individual living in the off-grid areas of the country can have access to loans through our LDCIP facility. In terms of best model, yeah, in other markets, I think this the digital model, which is PEGO, is the best one, because one, it reduces the collateral requirement, because the product itself is a collateral. Second, it makes the products easily accessible to rural people or living in remote areas, because they can use their mobile phone to pay for the product, and it reduces the transaction cost and makes the products very affordable. So that is one of the best business model. In our country now, we are trying to supporting the companies which are involved in direct sale. So this model, because that is the only option that we have in Ethiopia, because there is no PEGO or other digital services. So this direct sales method has its own disadvantage, because the consumers are required to come to marketplaces to buy the product, or the energy service providers need to go to remote areas to supply their products, both of which have increased the cost of acquiring energy products. But I think this digital solution will be the solution for the future.
Thank you a lot, Seifu Teshome. Look, now, guys, thanks a lot for all the participants. We're almost 10 minutes over time. There are still some various also interesting questions open, and the more you provide, Seifu, answer, the more questions come. But that means that really we are in the middle not of a question and answer, but really of a discussions. I think is really the way to go, and what the action group want to facilitate is really discussion among experts and interested parties. So what we are gonna do, we are gonna pass to Seifu the open question. If you'd be kind, maybe to come back by mail on what is open, maybe with some bullet point or something, so that people can then receive. Everyone will have access to the presentation. Everyone will have access to the video recording. Yeah, and so you can review that, and eventually you also find here both our address from the action group to Natalia, Davide, and Joanna, and myself. If you want to know something more about the action group as well, and if you want to collaborate more in this kind of discussion and generating of common learning and idea, welcome to join us, to join this participation on an ongoing basis, and not just through a webinar for the ones that are participating and are not yet part of the action group. And from the other side, yeah, you also see the address here of Seifu. So of course, because he put it here, I imagine that he welcomes you to contact him to know more about this project. And eventually, if you want to, to see how that could be enhanced with certain element that you were discussing, for example, private capital, etc. So I imagine that you will be happy to join this kind of discussion. So again, thanks a lot for all the participants. I'm sorry for the one we could not answer the question, but when people are so much interested, yeah, then at some point we go over time. Please feel free to reach us. Please feel free to join for the next round of the webinar in 2 weeks. We will communicate you the title. I don't know, Seifu, if you have any closing remarks if you want, and then we close the webinar.
Not really, except thanking you and the team as well as the participants and for their questions. So if they want to learn more about our work in Ethiopia or other countries, yeah, I'm happy to share. So they can contact me on the addresses provided in the slide. Thank you.
Fantastic. Thanks a lot again to you. Seifu, was admirable and great to listen to you. We learn a lot here. And the most interesting thing that we're formulating new questions and thinking about new strategy to how to overcome problems and how to multiply solutions that you found as interesting solutions. So thanks a lot for this sharing, and see you very soon to our next edition. Thanks a lot to the participants, and I wish you a fantastic green rest of the afternoon.